What's up traders? Long wick candle secret. How to trade long wick candles. Now how long is a long wick? Now to me, when a candle stand out from all other candles around is a long wick candle. Now what does a long wick candle mean? A long wick candle means a rejection of price. So when you see a rejection of price, that means the price is about to reverse. And that is when you can take the advantage of long wick candles. But the biggest mistake new traders, even the experienced traders make is when they see a long wick candle, they trade it straight away. When they see a pin bar, then they trade it straight away. But if you want to trade profitably long wick candle, you need to consider other context where this long wick candle is formed, why it is formed, and which direction you should trade. So today in this video, I'm gonna explain everything about long wick candle, what are the types of long wick candle, how you can trade them profitably. For those who are new to the channel, my name is Nizam. I'm a professional forex trader and also author at TradingView, founder of Forex Trading Wizard. If you're new to the channel, don't forget to subscribe, and also you know what to do, smash the like button, because you will find a lot of content in this channel that will help you to become profitable as a trader. Okay, let's begin. Now first, let's learn the types of long wick candle. The first type we can say is pin bar, hammer, shooting star, or hanging man. So these are the names based on where this has been formed, but the shape of the candle is same for all. So we can say as a pin bar. So what is a pin bar? A pin bar is when the wicks, this is called the wick. So what is a wick? When we see a price gone up and came down, create a line is a wick. So if you go down to the lower time frame, you may not see this wick. You may say, for example, if you see this in 2-hour chart, and then if you go to the 1-hour chart, you might see one candle like that and the other candle like this. So this is hourly chart, and you might see it in 2-hour chart like this. In this pin bar, first let's see what's happened. So the price opened here when the market opened, and then the buyers came, they pushed the price up to here. At this point, this is where the sellers take control. They push the price way back here, and the price closed back below the opening price and formed this candle. So this is what we call a pin bar. Depending on where it is forming, you might say hammer, shooting star, hanging man. There are many other names, but the structure, the form is same. The next candle type we will look at is called doji. So how this doji is formed? The doji is formed when the price opened here, and then what happened? The buyers came in the market. They started to buy. Then the price went up to this level. At this level, the sellers came, they pushed the price way back below here. And from here, again, the buyers came and they took control. The price closed here. So where the price open is almost closed there, and we can say it is a doji. Now, what doji mean is indecision. So when you see a doji, the better is to stay away from that market until it breaks in some way, or the buyers and sellers decide which way the market will move. The other types of long wick candle we look is called dragonfly doji. So what is a dragonfly doji? Is basically like this, a long wick with a small body, almost no body, with a small wick at the bottom or at the top like this. So we can say this is a dragonfly Doji. Now based on where it is forming, we will know how to trade them. Okay guys, so let's see this example in AUD NZD. Look at this candle here. See, this candle is what we can consider as a long wick candle. Why? Because if you look at this chart, which candle catches your eyes? Definitely this candle, right? Because this wick is standing out from any other candle in this chart. So that is what we consider as long wick candle. Now we found long wick candle. Now how you will be trading this candle, this way or this way? That you need to ask this question. Now if you see this, this market, this is in an uptrend. See, this is created an impulse correction, impulse correction, impulse correction. So every time it was going up, it is creating a higher high and higher low. That means it is in an uptrend. Now when this long wick candle is formed, will you go long from this zone or you will go short? This is the question that you need to ask. Now if it is an uptrend, logically you might say, well, I can go long from here, and then you will have a losing trade. What is the wrong to go long from this candle from here? Is because when you see a trending market creating a higher high and higher low, then when you see a double top, see this what this candle did is basically it created a double top and rejected from the resistance, and that is where the reversal is formed. And this long wick candle is telling this message that this price is about to reverse. The buyers completely exhausted, the sellers took control. Why? If you see that, see, this is a level of resistance and the price even couldn't break the previous high. So the trend is over, then it started to move, and then what happened? The price started to fall below, way back below what you need for this trading. So that's how this one we can trade. Now let's see this example, Aussie dollar. Okay, let's look at this candle here. See, this we can consider as a long wick candle. Now how you will be trading this long wick candle, this way or this way? The first thing you need to ask yourself, where this candle is formed. Now analyze the market structure. What you see, the price has gone up, creating this trend. So every time it is going up, it is creating a higher high and higher low. Okay, so this is in an uptrend. So when you see an uptrending market, the candle is, this long wick candle is formed in a level of trend line, in a level of support. So this is a dynamic support, this is a trend line for this move, right? And what happened, this long wick candle broke this trend line and then closed above. So which way you think logical to trade? That's right, long. So you need to go long for this candle because it has broken this trend line below and then closed above, created this long wick. That means lower price is rejected, the buyers is still in control. In that case, you will trade it from here. Your stop loss should be below this low and you will have a good profitable trade on this one as well. Now look at this example here. Look at this candle. This is also a long wick candle. Now you have to be very, very careful where this long wick candle is forming. You need to clearly understood, otherwise you will trade in a wrong direction. So where this candle is forming, let's find out the area of value. So if you draw here, look at this here, this is a strong level of resistance. So when you see a candle forming below the resistance, will you go long or will you go short? That is the crucial part you need to understand. Now look, if this candle broke this resistance close above like that, that is where you can go long because it broke the resistance closed above. But in this case, what happened? The price has been rejected from the downside but is just close below the resistance. That is where the secret. In that case, you have to trade this one in a short direction. So if you replay this chart, that's what I tried to find out this one to show you, that you have to trade this one short direction. That is what you need to understand. Now look at this one here. Okay, this is also a long wick candle. Now first of all, we found a doji. See, this is a perfect doji. When this doji is formed with a wick at the top and wick at the bottom, body without any, almost no body, this is a doji. When this doji is formed, you have to stay in the sideline, because when this formed, you don't know which way this market move, either move down or up. But after this doji, then what happened? This candle is formed, this narrow pin bar. That is where the trading opportunity comes. Now which way you are gonna trade this one, this way or that way, it will depends on where it is formed. Now look at the trend, the long-term trend. See, the long-term trend is down, and still we can see that the price went up, but the buyers are exhausted. After this doji, the buyers tried to push the price up, but they exhausted and closed below all these levels. So if you draw this level here, okay, so there is, if you draw this, there is a trend line, and if you saw the nearest level for this candle is here. So what happened? The price, the buyers pushed the price up, but the closed back below. So that's where you can consider this move to the downside. Now let's see an example for dragonfly doji. Okay, so they look at this candle here. This is a long wick dragonfly doji. So what happened? The price opened here, the buyers came back, they pushed the price up, then the sellers pushed price back below, and then finally is closed where it has started and forming this dragonfly doji. So when you see a dragonfly doji like that, that means what happened? The price, the buyers came, they created a trend, and then the buyers finally got exhausted, where you can find a trading opportunity. Now see where this candle is formed. It's formed in a strong level of resistance. See this level, if you see long term, so this is a level of resistance. So why it is resistance? If you see the price support here, the price came here and then broke above this support, tested as a resistance, and then rejected. So when this price is rejected, support here, and then rejected as a resistance, the price came below the resistance. That means the price cannot go up, higher price rejected, you can trade down from this zone. So that is how you can trade long wick candles. I hope that this video really helpful to you. If you find value in this analysis, then don't forget to subscribe and also like this video. Thank you for watching. I'll see you in my next video soon.